All right. Good day, everyone. Welcome to this Global Landscapes Forum Digital Summit on engaging the private sector and integrated landscape approaches. My name is Louis Wirtz. I'm the Director of Communications and Strategic Partnerships for Eco Agriculture Partners. We serve as the Secretariat for the Landscapes for People, Food, and Nature initiative, which is convened this in collaboration with the Global Landscapes Forum. The LPFN has a particular interest among its members in this topic. We hosted a discussion forum at the Global Landscapes Forum in Nairobi that you might think of as a precursor to this event. This digital summit provides a nice opportunity to take some of those messages and broaden the ability of people to engage with them across Africa, and also to bring in some more case studies from folks who couldn't be in Nairobi. So with that in mind, I want to introduce the first of our panelists. And the way that this is going to go is that we'll have a story from 4 different panelists that illustrates engaging the private sector in integrated landscape approaches. And then at the end of those 4 stories, we'll have about half an hour left for should everything go according to plan, for questions from the audience. And so, and some questions that I've prepared in advance. Hopefully there'll be some overlap between those two. The best way to ask a question is to use the Ask a Question button down at the bottom of the Crowdcast window, next to where it says People, at the bottom it says Ask a Question. That really directs questions nice and neatly to myself, the moderator. But you can also feel free to use the chat window on the right hand side to offer your thoughts as the speakers are talking, or pose the first question that comes to your mind. I'll try to keep track of both places, but if you have a burning question that you want to make sure that the speakers answer, please try to use the Ask a Question button to do that, so we can keep things organized. Okay, with that housekeeping out of the way, I want to introduce the first storyteller panelist that we have on the line. Joining us today, Mao Amos. Mao is the Executive Director of the African Center for a Green Economy based in Cape Town, South Africa. Correct, Mao?
Yeah.
And Mao has an interesting story to tell from South Africa about a landscape approach, a necessary landscape approach around the city of Durban. And I'll just let Mao, if you want to do any very brief additional introduction, and then please tell us about this interesting case that you're familiar with.
Thank you, Louis, and welcome everyone to the summit. Thanks for the invitation. I'm looking forward to some robust engagement this afternoon. As Louis said, my name is Mao Amos. I'm the Executive Director of the African Center for Green Economy, which is a think tank that's based in South Africa, but we work across the sub-Saharan region. Really, our mandate as the center is to track progress in the transition to a green and inclusive economy across Africa. And we use various metrics that help us to track to what extent we have made progress in achieving the transition. And one of those really is to find out the extent to which private sector is engaging in some of these core issues that are critical in terms of the transition, whether is to ensure that we mobilize investments into our landscapes, support key ecosystem services, and ultimately build a much more resilient economy. The case study that I would like to to put forward as an example of what I think is excellence in terms of private sector engagement in the broader landscape comes from a watershed in South Africa called the Umgeni Water Management Area, or the Umgeni Watershed. Essentially, if you have any idea about South Africa is at the bottom of the African continent, and to the east of there is the city of Durban. Durban is about 1.4 million people, and it gets its water from the Umgeni catchment, which is basically a key watershed that supports that 3.4 million inhabitants, if you like, in Durban. And as some of you have probably heard, South Africa over the last couple of years, and Cape Town in particular, has had significant water challenges. In fact, in April this year, it was we had basically there was weeks remaining where the city of Cape Town would have run out of water completely. And a few years ago, the same situation was in Durban, where a persistent drought that lasted for a period of 3 years caused significant risk to all the stakeholders within that watershed. And that led to first a recognition that water poses a shared risk, whether we're talking about businesses, we're talking about the private sector, we're talking about government, and so on. Ultimately, businesses are impacting on the landscape, but they're also drawing resources in the landscape. So any challenges around water availability has direct implications on their bottom lines. So that led to a very innovative partnership called the Umgeni Ecological Infrastructure Partnership. And that partnership really was founded on the basis that, as I said, water poses a shared risk. And therefore, if we're to bring an understanding that everyone needs to partake in protecting those key water resources, what are the kind of strategic investments that need to be invested within the landscape to ensure that it's sustainable over long term, and what role can the private sector play in that process of securing this key ecological infrastructure? And the second objective of that project really is how to improve governance, because we know that landscape scale management is a very multi-stakeholder kind of framework that are required, and effective governance structures are very, very critical. So the Ngeni catchment sought to secure more key government, I feel like governance measures that will allow that watershed to be well secured. And the role that the private sector played there was quite critical. And some of the companies that I can think about are Santam, for example. Santam is one of the biggest insurance companies in South Africa. And for them, the key risk that Santam faced was that because of because of the unsustainable agricultural practices upstream, it was causing significant flooding downstream in the city of Durban. And what that meant was that the insurance premiums would potentially go higher. As more incidents of flooding happen, it means that there going to be more claims from Santam. So they wanted to address the root cause of why there were so many claims that could potentially come to them. And so they understood that as a shared risk that they face. Another key player within the landscape is Coca-Cola. Coca-Cola, basically, sugarcane, most of the sugar that is grown in South Africa comes from the middle catchment of the Ngeni watershed. And for over a couple of years, their practices have been quite unsustainable. And so they are eroding the river basins and so on, and causing significant runoff downstream. And so Coca-Cola faced all sorts of risks from that landscape in terms of reputational risk, in terms of challenges from the regulator imposing all sorts of fines against them. And so they had an incentive to come into the table to play their role in terms of securing that ecosystem. And the third one is the Nedbank, which is a financial institution. Nedbank was concerned about the investments within that landscape. Obviously, being a water scarce landscape, they were worried that they are investing in companies that are operating within those basins. So they were having direct risk exposure in that regard. So I think that for me, that's a great example of private sector coming together to work with civil society, with groups like WWF, government, the Water Research Commission, to address what is essentially a shared risk. But if I'm to conclude, obviously the key barriers in this kind of arrangements is that there's no frameworks that can provide a guidance of how this thing can be done. So a lot of the undertaking is learning by doing, which means that you fail and try again and fail and try again. But really, for me, it's the idea that, if we're to address the environmental challenges, which are quite a wicked, we have to build a level of trust. And for me, that was really what worked in this program, that really a significant level of trust was built between companies that are traditional competitors. If you see company and private sector engagement, a lot of mistrust and so on. But framing the issues as a shared risk issue allowed people to leave their vested interest outside of the room and come into the space and saying, how can we tackle this challenge? Because it poses a shared risk to all of us. And that's the only way we can be able to take it forward. So that's really, I think that the case that I would like to present now, and look forward to your input.
Thank you very much, Mal. That was excellent and just on time. So I really appreciate that as well. And we'll get some good questions, I think, from the audience feedback on that. Now I want to turn to Edward Mudibo. Edward is the managing director of the East African Tea Trade Association, I think based in Mombasa, Kenya. And Edward is Edward's going to tell us about some of the challenges faced by tea producers, particularly in Kenya, as it relates to climate, energy, and this interesting intersection of those issues for a set of actors in the Kenyan tea production industry. Edward, feel free again to just do a very brief introduction of more detail about IATA if you would like, and then tell us about Kenyan tea producers engaged in these landscape approaches.
Yeah, thank you very much. As indicated, I'm Edward Mudibo, the Managing Director, East African Tea Trade Association. This is actually the umbrella body that covers the interests of the tea companies in Africa. We have 211 companies cutting across the value chain, and that is unique in itself. These are essentially the producers who constitute about 40% of the membership. We have warehousemen, the brokers, tea brokers were the middle agents. Then we have the packers of tea, and that essentially takes you across the 5 core categories of the value chain. Now, in terms of coverage, the association also covers 10 countries that literally bring their teas, transport their teas to Mombasa, Kenya, to the auction. The Mombasa auction is the largest in the world, and it's the only multi-origin auction, tea auction, that covers Kenya, Uganda, Tanzania, Rwanda, Burundi, DRC Congo, Madagascar, Malawi, and Ethiopia. So we have all these 10 countries that have confidence in this particular platform. That's aim is to ensure that more money gets back to the farmers and the investors in the tea fraternity. And now that brings us back to what really makes tea thrive within the region. One is that there's been that clear coexistence of members across the value chain, and that's why this particular thrived within the region. But then there are challenges which come in the way, and this is pertaining to the producers. Increasingly, the concerns raised by the producers in terms of the climate change that is taking place, that has been imminent. This is affecting volumes of tea. Not only that, there are also certain practices that come in the way. Based on that, we are looking at maybe the rain set patterns. There used to be so much consistency in terms of predictability of rain. For example, in Kericho, that is no longer the same because, again, much more sunshine is evidenced as opposed to regular rainfalls, rain set patterns that were there. You move to other areas in this east of the Rift Valley, also tea is predominant. The same still appertains. So certainly in terms of the aspects of climate change, that is a reality. We've had case studies done or reports done by the Food and Agricultural Organization which even intimated that if the position of maintaining the forest cover is not taken into account, possibly by year 2030, we may have half of the country being able to provide the tea as desired. Now, moving on also, alongside with climate change, we've also had issues to do with the land use pattern, whereby fragmentation continues. So again, from the producer's point, the fragmentation has continued in terms of the land sizes. As the families grow, the children want to have also a piece of the action, a piece of the land. So this is further subdivided. So matters of sustainability, where we find majority of the farmers holding 1/4 of an acre, half an acre, 1 acre, is becoming much more prominent. So this again is affecting issues to do with productivity of tea. Now, the other component is that of deforestation, the increased deforestation that has been eminent in the country. And, there is a bearing with the forest cover and the tea production. The more the forest cover, the more predictability in terms of the production of tea. Fortunately, in the East African region, Kenya, Uganda, Tanzania, there has been consistency such that tea is produced literally throughout the year. When we compare with Malawi, which is seasonal, tea is produced on a seasonal basis. We are fortunate on this part. But this all revolves around the issues to do with the climate change. So in terms of deforestation, what is happening in Kenya, we've had matter which we are all aware of, the Mau forest. The Mau forest had kept on being encroached by people moving into the forest to settle there with their families. And in the process, of course, cutting down trees to the extent that this has actually affected Kenya as a country. The Mau forest is actually the core tower where Kenya relies much of its rainfall from, and consequently the river streams which flow in parts, and there is a catchment to that extent. So we've had concern, and to this extent the government put a ban on deforestation in government forests. A committee was set up to look at this matter so that this is brought to an end. But the tea sector was spared because this is private sector, but on condition that we continue planting more trees as we continue cutting down the same for fuel energy. That takes us to the final part, and that is in terms of the small hydros. The East African Tea Trade Association worked closely with the UNEP, United Nations Environmental Program, and were able to come up with what we call the greening tea in East Africa. This was a pilot project which started off with Tagabi, the hydro project, and essentially was to take advantage of the gradient where the topography allows. Then feasibility studies would be carried out by this particular project to encourage the would-be companies to start up the small hydros, and that would tap on cutting down the expenses in terms of energy. Now, in the interest of in the tea sector, the energy costs constitute 30% of the expenses, which is quite high, out of which 18% electricity. What we've seen from the experience again is that have moved into the small hydros, like the Imentity factory, which is under the was able to demonstrate that by having the small hydro project, the expenses, overall expenses would go down dramatically. In the process, of course, the farmers would have more incomes. So based on that good experience, out of the 67 Kenya Tea Development Agency factories, more factories were encouraged to ask the managing agent to assist in the coming up with this particular program and to seek for funding through loans, concessionary International Finance Corporation, and other organizations. So that is where we are in terms of matters to do with climate and the land subdivision, deforestation, and the smallholder projects. I would hasten by concluding just to intimate we've received immense support from Solidaridad in this regard in terms of sensitizing the tea sector, the tea fraternity across the value chain on the import of appreciating climate change is there to stay, and we really need to look at mitigating factors in terms of reversing the same. This has been through the seminars, the workshops, the various forums that we've had within the East African region, essentially through the conferences held at country level and also conventions which are held every 2 years. The last having been in Nairobi in 2017. The next one will be in Kampala, Uganda in May 2019. So there's been that consistency of support from the agencies, of which we appreciate.
Great. Thank you, Edward. When we get to questions, I think we'll come back to try to hear a little bit more about specifically, what KTDA is doing to engage those companies in the specific places and the sort of the place-based constraints that they have in developing small hydro, and maybe hear a little bit more about what the feasibility study, who the other actors were, and stuff like that. So, but that was a really good introduction to those issues and sort of the broad case for why the tea sector in particular needs to think landscape. So thank you. Now I'm going to turn to Jan Willem den Besten. And Jan Willem, I'm not sure where exactly are you in the Netherlands currently? You're always around all around the world, but I'm in
Amsterdam.
Let people know where in the Netherlands you sit, but you work for IUCN as National Committee of the Netherlands as senior expert in green finance. I have your title correct, and you've been as a collaborator in the Landscapes for People, Food, and Nature initiative, and in particular with Eco Agriculture Partners, developing some specific tools to help the private sector engage in integrated landscape management. And I think you're going to tell us a couple of stories about piloting those tools in landscapes in Africa. And so I'm just going to tee up like that and then let you give people a little bit more background and then dive right into the cases in Ghana and Tanzania, I think, that you're going to touch on.
Yeah, mainly Ghana.
Great. Excellent.
Yeah.
Thanks.
Yes. Well, as perhaps some of you know, IUCN is an international network with offices and projects in many dozens of countries around the world. And IUCN is committed to conserve nature, to restore nature where it has disappeared or where soils are degraded, and do conservation and restoration in such a way that the benefits of natural resources and nature are shared equally and inclusively with those that live in and around those natural areas. So let me take you by the hand for a few minutes and show you how in such landscapes we try to engage the private sector to come with new approaches to reach scale and also increase resources to do that work. We often work in the more difficult areas where governance is not necessarily completely up to scratch, where CSOs work in difficult conditions. Now, our approach is threefold. First of all, we focus on building capacity of CSOs, as for example in the landscape in Ghana, in Atewa, at which we are going to focus. So we help build up multi-stakeholder landscape platforms. We work with those CSOs on improving inclusive governance. We work with the government on the rule of law and regulations. So all of this is the first focus is basically creating an enabling environment. Then the second strategy is to try to attract new forms of finance, combine public funds with private funds, and engage the private sector. So a lot tools and approaches in that second strategy are focused on business case development, finance literacy, and basically trying to bridge the divide that we see between project developers and CSOs on the one hand, and the financial sector and the business sector on the other. So step by step, bridging that divide from both sides. Because the third pillar is focusing on the financial and business sector. And there we use our examples to help companies and financial institutions raise the bars when it comes to social and environmental standards. So how does it work? Let's have a look at this landscape in Atewa. Atewa is close to Accra, the capital of Ghana. And you can say that, that Atewa is the water tower of Accra. It's a relatively small forest, but it's extremely biodiverse rich. And it is extremely important, as I already mentioned, for the provision of water to the capital, Accra, but also a lot of smallholders and companies in the area depend on the water and the quality of the water from this very high value forest area. The threats are huge, and the threats are increasing. A lot of the surrounding areas directly around the protected area have already been disrupted by gold mining, and currently there's a great threat of bauxite mining with large international investments queuing up to mine bauxite, and that would mean destroying almost the entire ridge on which the forest remains. So how do we go about tackling such a huge problem? Like, this is not your low-hanging fruit landscape where you already have a thriving business engagement and where you can easily start to work on greening their value chains and things like that. The threats are actually such that that there's only one way to go, which is campaign and engage the government to see if the plans with this area can change. So that's the kind of traditional CSO strategy, which we also support. And so there's a large and active CSO network that is pushing for a change in policy. But at the same time, of course, we see that we have to provide solutions, alternatives for local economic development, for strengthening of livelihoods. So the first step that we did is do a TEEP study, which basically maps the benefits and the costs of the usage of this forest. And so there were 4 scenarios ranging from business as usual to a complete mining of all the resources in the area. And the outcome of the TEEP study was that the scenario with the highest value for the community, but for society at large, was the scenario where you establish a national park with a well-managed buffer zone and then allow sustainable production in the area around it. The net present value over 30 years was calculated to be close to $1.2 billion with a discount rate of 5 years. And in the longer term, also this scenario would be creating the best value for the area and for the economy at large. But of course, this is long term, and as we all know, it is very difficult to move governments, companies, but even local actors also, to move them and help them to make decisions that create benefits in the long term and not in the short term. So what I'm going to show in this overview is how there's no one fit tool or one solution, of course, for such a mounting problem. But what I try to show is how different interventions lead to others, contribute to new forms of partnerships and collaboration, and gradually help this landscape, this multi-stakeholder landscape initiative, to move forward with an alternative development for the area. So the CHEAP study was quite a easy way to engage the private sector, because this was suddenly a conversation that they understood. So it led to a active business network where local companies such as international beer producer, a palm oil company, cocoa traders in the area, the water utility company of the government, and other producers in the area. They start to collaborate. Now, that of course, is nice. There's talking. People speak about commitments. There might be a way to pay for water services. CSR can be used to do pilot projects. But of course, there's more needed. So what we do at IUCN Netherlands is develop tools where we help CSOs to have the capacity to build the business case for some of these solutions. So what was very, very interesting is that when we organized an international finance course, a new actor, private sector actor that was not yet active at all in the Atewa region, came in touch with one of the key CSOs, Arosha Ghana, that is working on this on this entire program and campaign in the area. And a new collaboration started with this company that is a timber company. And even though our partner was initially a little bit hesitant, because they said, well, this is a timber company, they're doing they're in monoculture plantation forests, and that's something that we generally don't like. But anyway, it didn't actually take long for a discussion to start, and then the initiative started, where we look at the economic model for the restoration of gold mining. And so currently we are a few years on, and we are close to having a model for the restoration of the gold mining areas that have already been degraded as a business case for restoring what already has been destroyed in the area. And the model has already been taken up by the World Bank in other areas. And what you see is that it can go quite fast, but of course you don't immediately have a business case and a private sector investment. So at the moment we are at the stage where we're looking at combining some public funding with a possible impact investor to do a first pilot, and then see how that can be scaled up in the area, and also it can be applied in other areas. At the same time, we are applying our landscape investment and finance tool, and that is designed to not just work with one company, such as this timber company, which has a very important leading role in this process, but it also helps to bring in the other companies that I already mentioned that are in the business network, but are still sort of wondering what they can do. And so now we're at a stage to broaden this initiative and look, okay, what other potential business cases are there in terms of marketing ecosystem services such as water, in terms of doing organic cocoa, marketing NTFPs in the area. And so in the coming months and years, we're going to work on each of those potential value chains and then come to an integrated landscape investment plan. This is a process, as you imagine, goes slow, but it's the only way in which you can work in landscapes where private investments are not a logical option in the short run, but where you slowly have to bring down all these various actors, help build capacity, and the key is that we use interventions and tools that gradually help to narrow that gap that you see between finance and project development. And on both sides of the divide, you have to work on creating understanding, creating connections, and starting a process of combining public investments, private investors, combining CSOs with their solutions and the private sector. And of course, the government in all of this is extremely important.
Yes, thank you. Thank you, Jan Willem. That's excellent level of detail about that particular landscape and all of the different companies that are involved in the process, which was really illustrative because I think we've had a question so far that's sort of like, how does this stuff get started? And you really took us back to like where the kernel of this engagement happened. And so I hope that touched on that a little bit, and we can come back to that too. And maybe you could even tell us about the other case and sort of what the process for sort of wading in for companies is into the idea of collaborating in these spaces. So thank you very much for that. Now I want to turn to Seth Seamus. Seth is my colleague at Eco Agriculture Partners, partner with Jan Willem in the development and piloting of this landscape investment and finance toolkit that Jan mentioned at the very end of his story just now. And Seth is going to tell us about another landscape where that has been a component of the process of engaging the private sector. This is the one case that we're going to hear about that isn't from across Africa, but from far away from Africa in Cagayan de Oro in the Philippines, if I'm correct, Seth. Seth, just I should say, is the Director of Policy and Market Innovation at Eco Agriculture Partners. And I think you're sitting in Washington, D.C., or maybe in Tacoma Park, Maryland, just outside of Washington, D.C. This morning, your time. So Seth, why don't you tell us about the landscape in the Philippines and what's been going on there to engage the private sector?
Okay, thanks, Lou, and thanks to all the other panelists and everyone who's joining. That was a good introduction, Lou, so I can launch right into it. Just by way of introduction, I would like to to say that there are many reasons that private sector would engage with integrated landscape management or landscape approaches, and so we've heard about some of those here. Mao gave a really good example of shared risk, so from the perspective of private sector, we can talk about reducing risk. I think the clearest way I like to explain this is like if you're a hydropower plant or you're a water bottler plant in a watershed that you don't have control over that whole watershed, but others do. So there are other stakeholders there. So if you want to reduce the risk of water quality or water quantity degradation, you need to be part of this initiative. And there are other reasons private sector is interested too, besides that kind of risk. There's new market opportunities, there are reduced costs for business, all these kinds of things. But what I actually wanted to talk about in the case in the Philippines is just the value from people kind of getting together in the same room together. And this is something that Jan Willem was just touching on. And I'm highlighting this as an example of the use of this landscape investment and finance tool. And yes, it's outside of Africa, but it's the first place that we used it. So I thought I'd give an example, which I think is applicable. So this place is called Cagayan de Oro, and it's essentially kind of a ridge to reef type program. It's a strong multi-stakeholder group that got together when they realized how much degradation was going on in their watershed. They saw a lot of siltation from deforestation, killing off coral reefs. There was a big tropical storm in 2011 that created a lot of problems, and people realized they really needed to do something to restore and manage this river basin. So they started something called the Cagayan de Oro River Basin Management Committee that has local government, it has academia, it has CSOs, it has private companies, and really strong representation across stakeholder groups. And so they worked together for a while now to identify the things that they want to do in this landscape. So in addition to what we would call like enabling investments of trying to invest in better governance and better coordination among stakeholders, the kinds of things that they've identified that were important for the group were improvements in like watershed services broadly, improved water quality, improved water quantity, development of the cocoa industry for restoration in the kind of upper watershed. In the lower watershed, they were really interested in fruit tree development. They're also talked a lot about wind power. So those were some of the kind of priorities that came out of these discussions of what they wanted to do. So in this landscape investment finance tool process, and one of the place to, the place that these groups often start is trying to clarify, what kind of business ideas would come out of their priorities. So, clarify what your priorities are, but then like, what does this mean if you're trying to attract the private sector? So we had an experience where we went through a process of figuring out, well, what does that mean? If you want to do improved cocoa development and you want to do fruit tree development, like how does that even happen? What are the companies that are involved? Can they be at the table? What are the potential banks and the funders involved, and can they be at the table? So this, these conversations happened, and so there was a clear benefit for these companies, as hopefully I'll kind of make a case in a moment of why just kind of being at the table is useful for them. It provides them opportunities. So the two kind of business ideas I'm going to describe are inspired by something that's already happening in this place. So there's a company called Kennemer Foods, which is the largest supplier of cocoa to the international markets in the Philippines. It's a supplier of Mars, and Mars has made a zero deforestation pledge, and so they're very interested in the supply of their cocoa. So there's kind of pressure going down. So there's a program that's involves Kennemer. It's supported by FMO, which is the Dutch Development Bank, and there's a local bank in the Philippines, the Land Bank, where they've worked together to deal with kind of a market challenge and a finance challenge. So the market challenge is, well, who's going to be the buyer of the cocoa if you plant it? And that Kennemer says that, yes, we will buy this cocoa. The finance challenge is that they're working with a lot of kind of non-bankable smallholder farmers, if you will. There's a finance challenge for smallholders really all over the world is that there are not financial products for them. There might be microfinance that requires a monthly payback at a high interest rate, but if you're planting something like cocoa, it will take a long time, more than a month, obviously, before it comes to maturity and it gets sold. So they developed a financial innovation where the payback is linked to kind of the profit of the cocoa. So they basically, it's kind of a percentage of what they end up selling over time. So this is something that when we had a workshop and we all came together to develop some ideas. This was an idea that was really strong. So out of this, there were some people there who were interested in also working with Kennemer to do, in a different place within this landscape, kind of an intercropping of cocoa with indigenous trees. And there were some people there who were interested in the market for indigenous trees through wood and bamboo, and there was actually a representative of a local bank that was interested in potentially funding this and being part of the development of a business plan for this, saying, if this all checks out, we would provide financial products for these smallholder farmers. So this is kind of one idea that came out. Another one, in a similar vein, there was a fruit company named Uni Frutti that is I think it's an Italian company, but it has a lot of operations in the Philippines, in Mindanao, which is the island where Cagayan De Oro is. And so there were discussions, with this fruit company and also with indigenous trees and intercropping, exportable wood and bamboo, and ideas of developing kind of their own like candy producers in the area. So there were coming out of this workshop, there were plans to further develop business plans and continue discussions with these banks. So there were other ideas that came out of this workshop. There's payment for ecosystem service ideas, which I won't get into here, but I think I just kind of wanted to make this point that there are these potential win-win business opportunities for the private sector, and just by being at the table in these discussions for joint landscape priorities, there's an opportunity for them to access, supply, access opportunities that they would not otherwise have, and support a process that ultimately can do a lot of important things for their bottom line. So yeah, that's
great. Thanks, Seth.
Yeah,
really good concrete examples of what can develop when you when the private sector is engaged in these processes, and also what the value of a strong engagement across sectors can generate when you start to see the sort of synergies between the folks with the indigenous tree knowledge and background and interest and the people interested in making fruity candy, and the potential collaborations. It's fascinating. So I think we've got Edward Madibo back on the line. Unfortunately, he dropped off for a little while, so you didn't hear probably quite a bit of the middle portion. But before he drops off again, I wanted to make sure that we had an opportunity to hear from him in relation to some of the questions we've got from the audience. So we'll keep Seth on screen and bring Edward back. And then I just wanted to ask, I'll ask this question that we got from Martin, which I think is useful in both cases, which is related to the scale of the private sector businesses and their engagement. We've actually heard a huge variation in scale from Coca-Cola in South Africa, SAB Miller, two of the world's largest corporations, we shouldn't neglect the fact that smallholder farmers individually constitute members of the private sector, and that the financial products that Seth mentioned that were critical for supporting these interventions needed to be tailored to that scale of private sector interest. His question is about is there what are those scale challenges? Does the size of the private sector or the scale of the landscape issue form a particular kind of barrier or opportunity to engaging, to get genuine interest from the private sector? And then what about the smaller companies, and how do we, convince them that there's a cost, the cost benefit ratio for engaging in these things is right for small and medium enterprises. I wonder if there's some example from the case of Kenyan Tea, the Kenyan Tea Development Agency, obviously a fairly large corporation, but individual tea producers at the landscape level around, say, Amenti, much smaller actors in the private sector. What are the challenges to getting both scales involved in thinking through these issues, Edward?
In terms of the Kenyan scenario, where we have the Kenyan Tea Development Agency, first we should say it's a good case that a model that should be replicated in other parts of the world. It's unique in that it involves more than 650,000 farmers. They are dependent on this, and we are looking at a population of about 4 million people, directly and indirectly, benefiting from tea. The agencies, in fact, holds a lot of sway in terms of Kenya's foreign exchange, because tea is the largest foreign exchange earner. In terms of also the export commodities, we may say, much evolves around tea. Now, getting to the point of the Amenti, for example, as a case study, I did intimate that all these success projects arose first and foremost from the Greening Tea in East Africa project that was funded and supported by the United Nations Environmental Program, a 5-year project which closed down in 2013. And thereafter, we've been replicating. So KTDA picked Q and started up KTDA Power. And it's out of the KTDA Power subsidiary of the overall KTDA, which is a private company, that they initiated also Amenti as one of the flagship projects. Now, the demonstration was, when you have such a project, it scales down the expenses, and in turn, the farmers benefit. So that is now something that has evolved. KTDA itself has been able to put in more than 4.8 billion shillings, Kenya shillings, in form of investing in the small hydro projects, because that is a success project story. In addition, we are saying that that has to continue because the energy costs in the tea sector account for 30% of the key component, I mean, in terms of overall expenses. So you'd want to reduce that so that the benefit goes down to the farmers, in the case of small holders, or in big investors like Unilever, Finlays. Those would also get benefit because they're investors in this particular project. So those are the dynamics that we have at play. The small holders are really dependent on tea, not only in Kenya, but also in the other countries, Uganda and in Tanzania. So those are the dynamics which are at play.
Thanks,
in terms of the megawatts, we are looking at, for example, the Gisie. Gisie was the initial aspect. We're looking at 4 megawatts for Gisie. That's the Rwanda Mountain Tea. If we look at Rwanda was also involved in the project. In Tanzania, we had the Suma Hydro project. That was Wakulima, but that was still ongoing by the time the project ended. In KTDA, we have the North Mathioya Kipchoria project, again, which had 3 megawatts. So all these were able to support the processing of the tea.
Great, thanks, Edward. Seth, I wonder, in the case of Cagayan De Oro specifically, what the scale of the different business actors, like the breadth of it was, and then how they were engaging. I think we also heard a little bit about governance from everybody. Every presenter sort of touched on the challenges of governance and the benefit potentially in bringing stakeholders together to form sort of a model for resource governance that is functional in these areas. And that sort of points to this power imbalance question between small enterprises, smallholder farmers who need to be represented in these partnerships, and sort of the way that big companies have at least their reputation for acting as large power brokers. And sort of Edward hinted at that too with the sway that the KTDA has on tea producers in Kenya. Could you describe a little bit about what how the multi-stakeholder partnership in Cagayan De Oro dealt with this, or where you've seen good examples of how the private sector can be positive actors in good governance structures within landscape approaches?
Yeah. The question of power balance, I almost want to kick that over to Jan Willem, because he's talking about a tewa in a place where there's it might be more of an issue, maybe I'll say, than in Cagayan De Oro, but there are some similar issues. The issue of scale, I don't know if this exactly answers your question, but I wanted to throw out a new word here: aggregation. And this is important when thinking about whether it's kind of you're calling small scale or large scale private sector actors within the context of landscape initiative. In Cagayan De Oro, there was actually a fair amount of discussion about how smallholder cocoa producers could kind of reach their own market, even if it wasn't from selling directly to Kennemer. And a lot of if we have a certain number of producers, then we can place our own fermentation plant. If we have like 2,000 producers or something. And that was a discussion that had to happen at a certain scale, because there had to be kind of organization that happened that didn't currently exist. So I think those kinds of things can happen in the context of a landscape initiative, particularly if there's a lot of interest in having more cocoa production with the logic of having more cocoa improves like watershed service function. And that smaller group that wants to come together to have their own fermentation plant can get additional support. Kind of that would be a case for that. And then the other thing I kind of wanted to say about scale is just to kind of raise a challenge for financing, and for a group like Kennemer, that they are also interested in scale to have enough supply in a place to make engagement worth their while. So that goes for the companies that are buying products, and it also goes for financial institutions that are trying to make investments in a place. So depending on what that institution is, they might want to spend way more money or invest way more money than there are kind of investable projects in a place. And this is why it's really important to understand that with finance, there are many different types of sources of finance and instruments. And sometimes what you really want is a partner that is a local bank, that has their feet on the ground in a place, and they're the appropriate partner. And that you shouldn't be looking for a national or an international financial institution to support you, because they're going to push you in a direction that maybe you weren't planning to go in the first place, and so this is another, I think, benefit of partners, stakeholders getting together, particularly to talk about these private sector and finance issues, because they can get access to kind of information and relationships that are, more appropriate for what they would want, rather than kind of being, pushed in a direction because they don't know about the other choices.
Really valuable. I think this brings up a question in my mind, and there was a question from the panel or from the audience as well that had to do with actual figures on investment return and the sort of value in dollars for companies, and it's obviously very difficult to talk about for many of these projects, where Jan Willem hinted at this long-term returns or relatively long-term payback periods, and we may be only in the beginning stages of these collaborative investments. But I wondered if Edward and Seth, you could both maybe point to a case where the sort of scale of finance was matched appropriately with the need, and what was motivating the investor, which I think helps get to that a little bit. We've heard a little bit from each of you about this particular kinds of investors and how that finance match was made. If you have some more details about sort of what their expectations are in terms of return, and also in terms of time period, that might help illustrate this a little bit, this challenge, and also the opportunity of working in these ways, in collaborative ways around landscapes. Edward, in terms of investors in the power in the small hydro, have you seen a change in the way that investors see those projects from sort of the pilot phase to now, where we have a little bit of proof of concept, and has the type of investor changed and what their expectations of returns are?
What has happened uniquely if I may pick the case of the Kenya Tea Development Agency, it's a private company, but with several subsidiaries. So what they've done is they've treated it as a co-function whereby they service the 67 factories. Not all, of course, will access the power or have a project done for them, but in spirit, the company as a managing agent is able to solicit funding, loans, and other lines of credit for purposes of the factories being able to run the same. Then that is deducted from the factories that are beneficiaries on a medium to long-term basis. So it's recovered in minute amounts such that the farmers do not really feel the pinch when these loans are being paid for. So there's that facilitative role done by KTDA. Now, in terms of governance, and it's good this was brought out, governance, we may look at it, for example, at the association level. We have governance cutting across the value chain. All the key members of the value chain, producers, have half the number of members on the board of VATTA, and they're drawn from Uganda, Tanzania, Rwanda, and Burundi. In Kenya, we have got one representing the large scale, the investors, the plantations, and one representing KTDA, that's the agency. Then we have one Packer director, one warehouse band director. We also have the Packers. So everyone is consolidated. So we have 14 board members, including the managing director. We've been able to manage the competing interests because you'll appreciate the producers want more in terms of returns of for their crop of tea. The buyers also would want to see how much less can they pay still to benefit and get the tea. Somehow we've been able to work on the trade-offs. Finally, is about the trade. We've handled so much about producers. What about the trade component, covering the brokers, the warehousemen, packers, and exporters? I would put it that 80% of the traders or those businessmen run mainly in Mombasa. 80% are SMEs, but they constitute 20% of the value of tea that we handle here. 20% are the multinationals, the large key players, who constitute 80% of the business. Somehow you can see a lot of employment is created, foreign exchange is provided, and governments, not only for Kenya, Uganda, Tanzania, governments are more and more involved in seeing how best they can support the small and medium enterprises come up in this regard. So that's essentially the model. Even as we look at the small hydros, it's capital intensive, but it's being done through well-structured companies. Finlays is able to do it its own without much ado. The same as Unilever, they have their projects, but more are even going towards solar initiative projects so that they are also able to scale down on costs.
All right. Well, thank you both, Seth and Edward. I want to, because we've already run a little over time, but I want to make sure we get to Mao and Jan Willem and pose some of these questions to them. I'm going to bring them up on screen, and we've got a couple other questions coming in now, which is good. I think we're just going to continue to take that as a sign that there's some enthusiasm for us to run a little bit over time here, and bring Mao, if he's on, back, along with Jan. As I wait for them to pop up on the screen here. Hi, Mao. Thanks for waiting patiently to add your voice to this discussion after you went first so long ago. Hopefully we kept you interested as well in this conversation throughout. And Jan Willem, I want to ask you guys this this governance question, which came up for both folks, but for the previous panelists, which I think is pretty instructive, and I think maybe we don't talk about it enough. I think there's a lot of interest in engaging the private sector in these approaches, but one thing that Mao mentioned in his presentation was that there aren't necessarily very well-known frameworks for how a partnership between large companies and civil society organizations and representatives of smallholder farmers can work. We don't have lots of examples of that. And so we're sort of building these governance structures as we go, as we fly the plane. And so I wondered if the two of you, which had both such interesting cases where that's happening, could talk a little bit about what that looked like, what that looks like as it's developing, and how companies were willing to sort of step into that unknown, along with their CSO partners and the other folks in the local governments and the national governments who are involved, and sort of come up with some solutions, and what maybe just a rough outline, since we don't have a ton of time, those solutions look like. Why don't we start with you, Mao, since we haven't heard from you so long?
Yeah, thank you. I think that if I just delve straight to the issue, there are two things I would like to raise. One is that, from this case study that I'm presenting, that, water is a local problem, so its impact is very location specific. And so the issue around scale oftentimes does not really arise, because you're talking about a specific river reach or a point where everyone is basically abstracting water for a particular use and so on. If a company might be concerned about a brewery, or the local municipality might be concerned about that it doesn't have sustainable supply for its water needs at the local level. So that allows almost, if you like, somewhat of a level playing field. That, because it does not matter how big a company's balance sheet is, you're really dealing with a very specific issue with a particular manager whose jurisdiction is defined, essentially by that problem that you're handling. But I think that obviously, even though water is a local problem, we also do recognize that the power dynamics are quite come at play all the time, and particularly South Africa. South Africa has had a very long and difficult history in terms of social justice and things like that. So the key thing I've seen my experience here is that representation in terms of governance structures is not really the only thing. It's the quality of representation, because you might have people in the room here, but it's how they present the issues, how much voice they have in the space that really matters. So so in terms of the tools that are required, the tools are, they should go beyond just saying like we have this number of people, this sector represented, and so on. It's really about the quality of engagement within that room, and making sure that the power dynamics are kind of handled appropriately. So the key issue around facilitation becomes absolutely critical, because if you put a CEO of a company with an MBA in a room with a community member who is running an SME that employs one or two people, it's obvious that the dynamics will play in favor of the guy who is an MBA holder. But it's really the facilitator that brings the key stakeholders within to really chart the way forward.
Thank you very much. That's brilliant. I think that points to a really critical element of this that might often go overlooked. Jan, do you want to touch on a similar, in a similar vein, and from the Atiwa perspective?
Yeah, I mean, when you talk about governance, one aspect that I didn't actually mention, I forgot to mention the role of the traditional authorities in the Atiwa landscape, which is very important. Without going into details about the exact social structure and the role of the traditional authorities, but not only the statements of the traditional authorities in the case of Atiwa have been very strong and very supportive of a more sustainable approach to the future of the landscape, but also, for example, things like tenure. They at some point passed a rule or a structure by which they said farmers that sold the right over the land to gold mining companies, which are often small, informal, but also some larger companies, they're allowed to get these rights back if they commit to restore and reforest the area. It's just a small example. I mean, as we all know, tenure rights and land rights are often very complex, and farmers are extremely vulnerable because tenure arrangements are often oral, not documented. So, for example, when farmers give away the right over their land, for example, if they have a cocoa farm, because they get a quick benefit from the mining or from the transaction that they get for giving the land available for the mining, they're then, of course, in the long term, they are worse off, because in the long term they've lost their source of income to the cocoa farm. So, for example, that's an example of how the traditional authority, for example, plays a very important part in one aspect of that. I want to mention some other two other landscapes in Ghana where we and also many other NGOs are working. One is, of course, the cocoa growing landscape, which is also partly covering Atiwa, and the third landscape is the Shea savanna landscape in the north of Ghana. Both in the cocoa area as well as in the Shea area around Mole National Park, we have projects. And what is very instrumental in our work with the private sector and strengthening governance and strengthening inclusive governance with local women, with youth, with local smallholders, and that is the CREMA concept, Community Resource Management Area. It has its origins in Zimbabwe, where it was first developed around the campfire program, but it found its way also in Ghana, and it's actually enshrined in, for example, the forestry law. It provides for the possibility to devolve the rights to reap benefits from natural resources to the communities through the district assembly. And it's very interesting example where the community, once they have achieved that right to organize themselves to manage the natural resources, once they have done that, then the crema becomes almost like a mini landscape, which has an internal system of raising revenues, of organizing women around, for example, the Shea collection and value chain and selling of Shea. And when you talk about the landscape approach, the problem is, of course, always that you start somewhere with a project, or you're only working with one value chain. And so when do you actually manage to go from one single initiative to the larger landscapes, And the CREMA model in Ghana has been very beneficial for organizations like us that start with CSOs, with some intervention, and then want to scale it up. For example, in the cocoa growing area, in several areas, large cocoa buying companies are now linking their particular sustainability approach. Each company has their own approach. We all know all these companies are trying to work towards more sustainability. But they, when with our partners, they do it in one or two cremas, then they can measure the impact, for example, reduce deforestation in that mini landscape, and it becomes a model to scale up.
Yeah. So actually, back to a general question that I think is also really fascinating, which is you've pointed at the sort of what's the pathway to a landscape initiative for companies to get involved? How do we start where something is where you've got and you pointed to like the kernel might be a crema in a place or a set of them, or in the case of Umgeni, there was a very clear shared risk that sort of forced this hand. But I wondered if you guys could just take a second to think maybe of other cases or the common patterns you see that allow us to transition from value chain approaches or from single companies acting to improve their sustainability to the kind of collaboration that we're talking about in these cases, so people could imagine. So in the places where they're working, what steps could I take to sort of encourage these kind of partnerships if they're sort of nascent or burgeoning or needed?
I think in the experience of South Africa, I used to work for WWF for 5 years. And for me, what I saw as a key denominator really was a very strong, if you like, partner or a facilitator that has a strong convening power that can bring these different stakeholders. And I think that's a really an important issue. And a partner, a facilitator that recognizes that these engagements are not just a quick, they are long-term type engagements. So if I look at the work that started with WWF, it started literally with one company, and really nudging the company almost from a corporate social responsibility perspective. But the more you engage with the companies, the more they recognize that this is just beyond corporate social responsibility. It affects the bottom line. That led SAB Miller, for example, to develop, to undertake a water footprint assessment to see how much water does it take to make beer, for example. And once a company like SAB bought in, they essentially became the champion, because the private sector will come to the room if they know there is another private sector in the room. And oftentimes the relationship between private sector and civil society tend to be antagonistic, and not just by the mere fact that the language spoken is different, and so having the champion on the other side, I think becomes really, really an important issue. And then also just obviously educating them, linking them to the global conversations around where these things are headed. Many of these companies are linked to global supply chains. And that speaks to the question that someone asked about, where in countries where there's no effective governance frameworks, how do you engage the private sector? And I think for me, the response there is that, yeah, even though the private sector might be working locally, they are plugged into global supply chains. If you look at the flower farmers in Naivasha, for example, they started taking water quite seriously because consumers in Amsterdam who are buying flowers are asking, where are your flowers coming from? All of a sudden, they needed to look at their practices on the farm. In South Africa, citrus farmers, fruit farmers have had to face the same issues around labor practices because consumers in Europe are asking those tough questions. So for me, it's really understanding where those leverage points are, and you use those leverage points to bring the private sector into the room.
Brilliant. Thanks, Mal. Yeah, and you even touched on a question I hadn't had a chance to raise, which I really appreciate you checking those out too. Jan, do you have some insight there to close us up, and then I think we'll just wrap up really quickly after your last thoughts here.
Answer to the same question.
Yeah, if you feel like I think you probably have some insight from IUCN's work around about how these things sort of coalesce, in over long-term engagements. Yes.
It's true that there has to be a convener that brings together the multi-stakeholder initiative, and then indeed we often see that one company is at some point taking a lead, addressing one part of the puzzle, and that company, of course, is the best actor to also engage other companies. So, for example, I talked about the Shia landscape, the buffer zone around the Mola National Park, where our partners had been working for more than 10 years, organizing these communities. Once they started to work with a company called the Savannah Foods Company, for example, which is a relatively small company as compared to the 300 something larger value chain companies in the Shia business. But while working with that company, they also learned how to design their project in a different way. And the Savannah Food Company is a frontrunner company that also puts money into a conservation fund, for example. They do trainings with women, and after a few years, Form International, the same plantation company that I was talking about, who are developing this model for the restoration of degraded gold mining sites, they stepped in and they started to take care of the restoration component, where seedlings, they started to develop places where seedlings were grown up for reintroducing Shia trees in the landscape, with the communities, with trainings, and they talk with larger Shia trading companies, and this is a process that is right now still developing. But what I see is that by working with two of these SMEs, it is a direct link to having a discussion at a global level. For example, in this case, within the Global Shia Alliance, and we are not yet there. But together with the Shia component, the restoration timber component, we see real opportunities to come with a model that eventually can also be scaled up by these larger value chain companies. As in a lot of our landscapes, it's not often straightforward, and it's not a quick gain process, but it's the only way forward to make a different kind of development possible in those areas where traditionally the NGOs have been relatively far removed from the private sector and therefore have been very vulnerable.
Excellent, thanks. So yeah, we're going to wrap up now, but I do, just because you guys have been so patient to hang on the line, and the audience who's still here must be really into this, and there's got to be some place to go to continue the conversation or to find out more, or and so I want to give you each an opportunity to share some resources, or where you'll be next, or something upcoming, or a place to go online to find more information that you think that would be valuable for everyone to hear about. And then I'll do the same and close this off. Mel?
Thanks, Louis. Obviously, our website is africancenter.org. But I really an important, next year, as part of the Green Economy Coalition, we're hosting our global meeting in Cape Town on the back of the UN page ministerial meeting on the program Action for Green Economy Coalition. UN page meeting is in Cape Town, and we're co-hosting a side event in partnership with the Green Economy Coalition. So if you're in Cape Town, please do join us. Go look up the Umgeni Ecological Infrastructure Partnership. I think there's really interesting case studies in South Africa of how to direct investments into the broader landscape. So yeah, look forward to engaging with you. And thanks for hosting this week.
No problem. Thank you, Mel. Jan Willem, where will you be next? Where should people go?
We'll be next internationally. We have a side event at the EU Pavilion. The Benelux Pavilion, I think it is, at the COP in Katowice. We'll have a side event about the role of monitoring frameworks and standards in landscape approaches to deforestation. At the Global Landscapes Forum on the 1st and 2nd of December, we are hoping to, again, like last year, set up a landscape finance pavilion where we will present our work. And otherwise, please go to our website, the IUCN NL website, but also our international IUCN website, because especially also our regional offices and offices in countries in Africa are doing amazing work with these kind of programs and with monitoring frameworks, etc. And some of the tools you can also find. I don't have the URL on my mind directly, but the landscape investment finance tool you can also find online and download it. And I don't know if you share the websites.
And we'll be able to share these resources and some of the stuff with the audience in a follow-up. All the registered attendees. I think it should be possible to send out some of this stuff directly too, so you don't have to be jotting it all down. But we'll make sure we share it. Yeah. Thanks.
And also, don't hesitate to contact us if you want to share your stories, or if we can, provide assistance with our tools, etc.
Excellent. Yeah, thank you. I wanted to extend that invitation. Please, members of the audience, don't hesitate to send. If you want to reach one of the panelists and you can't find them on the websites that they shared, you're welcome to send me an email. My email address is lwertz@ecoagriculture.org. We'll share that information with the group, and then I can put you in touch with any of the panelists with questions. The links that are mentioned we'll try to share as best we can. And then I also want to reiterate that this conversation continues at the Global Landscapes Forum in Bonn, December 1st and 2nd. As Jan Willem mentioned, fairly almost 100% confident that the Landscapes for People, Food, Nature initiative will be hosting again this year an inclusive finance and business engagement in landscapes pavilion at GLF Bonn, and many of these conversations and will be sort of focused on some of these issues throughout the 2 days. So we look forward to seeing you there, and hopefully we'll be able to live stream some of those sessions as well. So if you can't make it to Bonn, you can engage with us online again that time. Nadine shared the Lift website, which is liftkit.info. I would encourage everyone to go and download that, because a lot of the background information about engaging with finance and business in landscapes is provided in the primer that Jan Willem and Seth Seamus prepared that accompanies that. So With all that said, and I just want to say thank you again to our excellent panelists for their insight, the stories, the knowledge of how this works at the landscape level that they brought today. And thank you so much to the audience for bearing with us over an hour and 20 minutes and staying engaged in the chat and asking such intelligent questions. And really encourage you to continue to have this conversation, because that's how we're going to build these bridges between these various types of actors and get to a future we all want. So thanks, and have an excellent rest of your day.